Is life insurance a sound investment? If portfolio investments were people at a party, then the cool kids, growth stocks, real estate, retirement accounts, and exchange-traded funds would huddle in a closed circle. Those dull yet dependable bonds would stand just outside, trying to fit in. And alone in a corner not far from the annuities, you'd have whole life insurance, complicated, frumpy, and arguably not worth the time and trouble. Indeed, the notion of skipping life insurance as an investment and plowing the saved cash into more profitable areas has its allure for some investors. Term life policies, while they don't build cash value, are more affordable, simpler to grasp, and easy to comparison shop. Quote, if you're pricing out term and permanent life policies and term will provide sufficient coverage, consider buying the term policy, says Melinda Kibler, portfolio manager with the Palisades Hudson Financial Group in Fort Lauderdale, Florida. Use the difference in premium to add to your investment portfolio as opposed to using the permanent life policy as an investment option. And so the question arises, is life insurance a good investment at all? Quote, life insurance products, whether they are term life, whole life, or another variety, are meant to be financial protection for your heirs, said Jim Poolman, executive director of the Indexed Annuity Leadership Council. They are not meant to be investment products and shouldn't be regarded as such, because they will never live up to the product designed as investment vehicles. Quote, there is merit to the negative argument among non-annuity insurance products, says Andrew Murdoch, president of Somerset Wealth Strategies in Portland, Oregon. He cites the variable annuity and universal life policy, which invests in sub-accounts such as mutual funds under a life insurance wrapper. This type of account has to perform well enough to pay the cost of insurance and provide growth over and above it. Murdoch characterizes life insurance as more a peace of mind play than a growth play. But, he adds, not all insurance investments are bad. Annuities issued by insurance companies are generally good and the only product offering guaranteed income for life. If not all are bad, could insurance investment possibly be good then? Quote, most circumstances don't call for whole life insurance with the exception of estate planning, buy-sell arrangement, executive benefits, or pension maximization, says Mike Chadwick, CEO of Chadwick Finance in Unionville, Connecticut. Almost all other situations call for term insurance, and it's far less costly. That's not to say others don't reap rewards from whole life. Those who push it, that is, insurance is certainly sold, and there are very sophisticated sales techniques to sell it, he says. But some contend that most objections to whole life are simply unfounded. Quote, insurance has been a smart investment for years, says David F. Keefe III, a financial advisor for 4 Point Financial in Waltham, Massachusetts. Keefe cites the Great Recession as an example. If you needed cash from your portfolio in January 2009 and you had $50,000 in a mutual fund and $50,000 cash value insurance, where would be the best place to take it from? Over a 6-year period to now, that could have saved you $50,000 in additional mutual fund growth. Whole life can also build up a tax-sheltered savings that can subsidize retirement planning and make portfolios more complete by offering steady balance, insurance experts say. Quote, insurance products are used to complement and balance the risk of an investment portfolio, says Mark S. Cardoza, founder of the Retirement Education Resource Center of North America. Whole life insurance within a mutual company will produce 68% growth between interest and dividend during a down market, thus a time outperform the market. Pullman says the annuities, a close cousin of life insurance and sold by the same agents, can serve a key purpose in a portfolio. Those products guaranteed income streams upon retirement. Quote, it can never be outlived, which is a solution that one of the most significant financial obstacle aging Americans face today, he says. And while it's not an investment move, life insurance policies with cash value, whole, universal, and variable, can serve as a part of a broader tax strategy. Quote, once cash value is built up in your policy, you can use this as a collateral to take a loan from an insurance company, says Sean A. Quigley, author of the cash play capitalizing on the opportunity value of cash. Here's how it works. Quote, you set up your own unstructured loan with no repayment schedule, which allows you to skip traditional bank financing. Since it's a loan and not a direct distribution, you do not owe any income tax, Quigley says. Even if you want to bypass whole, don't overlook life insurance as a whole. That's the equivalent of flying without a financial safety net. Quote, the question of whether or not to buy whole life shouldn't be confused with whether or not to buy life insurance at all, says Jeremy Hallett, founder of the CEO of Quotacy, an online term insurance marketplace. Everyone needs life insurance if they have others who depend on their financially in any way. And so let's return to the portfolio party, where whole life may never make it into the charmed investment circle, but it shouldn't be kicked out on a whim either. It might just be, if you will, a life saver. Quote, insurance and investment portfolios should be kept separate and managed separately, Cardoza says. The purpose for investing in insurance products should be to protect the individual from the risk in an investment portfolio or life in general. Thank you for watching the Shakaama Live Show. Please like the video. If you haven't subscribed, please subscribe. Thank you.